Hi, everybody. Hello. So I have to start this with something very bizarre that's happening in my home right now, and only during Zoom meetings would this happen. So I live kind of out in the south in the Hudson area, and my backyard is like a forest, and so I have a couple of animals, and one of my animals literally while this has started about 5 minutes ago, one of my animals brought in a chipmunk to my house, and it's live and it's somewhere running around my home.
Oh
So if
no.
you hear me jump or scream or my dogs, it's because there's a chipmunk somewhere in my home right
Oh,
now.
oh God.
I know. So, but yeah, welcome and thank you for Yolanda. Thanks for asking, and ladies, thank you for having me. I hope this is interactive. Please stop and ask questions along the way. But what we're going to talk about today is how businesses can access capital and access it in a innovative, non-traditional way. And then, what that looks like and why we do it. So just to give you a brief overview of what Honeycomb is and a little history of why we do what we do. As Yolanda mentioned, I spent 2 decades in traditional corporate finance and walked away a few years ago and launched Honeycomb throughout Cleveland and now throughout the Midwest and actually now throughout the United States. But it all started with a little community bank and a juice shop. So crowdfunding, the regulation crowdfunding came about in 2016. So most people, when they think of crowdfunding, or if they've ever even heard of crowdfunding, they think of donation-based crowdfunding. And that is kind of like your GoFundMes and your Kickstarters. And there's a great place for those right now. We're seeing a lot of philanthropy. We're seeing people really step up. So there's definitely a place for that. But that's not the type of crowdfunding that we do. What we have found, and the reason why we do what we do is the CEO and myself and the co-founder of the company, we all are what we call recovering bankers. So the CEO's father actually owns a bank. Our co-founder is an investment banker. You heard that I've been in banking. But what we found is that there's a funding gap, and there is a huge funding gap for small businesses to access capital. So this basically tells you small businesses typically go to a community bank when they need access to capital for whatever funding project they have. But what's happening is community banks are getting eaten up and they're closing at a really large rate. So that leaves small businesses with very little room to figure out what to do when they either want to start their business, scale their business, and grow. So they lean on things like family and friends and credit cards and predatory lending, and it makes it really difficult to grow their business. But what is interesting is that 62% of our economy is small business. And in order for small businesses to thrive, they're going to need access to capital. So what we do is we allow for these locally owned businesses to borrow directly from their consumers, from their backyard, directly from people that they know. So when regulation crowdfunding passed in 2016, what it did was, prior to that regulation, if you were a business of any type as long as you weren't an IPO business. So if you were a privately owned business and you were looking to access capital through an investor, that investor would have had to be accredited, and you would have had to give away equity or shares of your business to take on an investor. So when this regulation passed, it allowed for everyday people to now invest in Main Street independently owned businesses. So now capital can be deployed from the bottom up instead of the top down. And that's our overall mission. Our overall mission is to ensure that that 62% of the economy thrives through community capital. And that's what we'll talk about, is what is this community capital, and how does this whole thing work? So when you decide that you're looking for capital and you have a decision that you're going to run a crowdfunding campaign, these are some of the things that you get. You obviously get capital, fair capital. And as I mentioned, you don't have to give away any of your equity. You get to keep 100% of your business. And then you also get to share your story with the world. So what crowdfunding does is it's a way for you to shout from the rooftops what your project is, so you increase your branding. What the investors get is they get the rate of return that you're paying on the loan. So anyone that invests in you as little as $100, whatever your interest rate is on the loan, they're getting that for the life of the loan. So for example, if you crowdfund $25,000 and your interest rate is 6%, all of the people that invest in you, that's where you're getting your money. They're the ones that are getting the 6% for the life of the loan. The other thing that investors get that I was just talking to Yolanda about is that people buy emotionally, they don't really buy financially. So yes, they're getting this attractive rate of return, but typically businesses are buying emotionally. And now, because of COVID, people in households are buying even more emotionally, and they're investing in local more than they ever have been, because they understand that communities are going to thrive if they give commerce back. And then that's basically what the community gets. The community gets stronger ties with their businesses and healthier economies. So what's our approach? So we view crowdfunding as a tool to level up your business, level up the business's existing customer base. So we focus on working side by side to build a professional strategy and outreach campaign that will level up your existing customers and transform them into evangelists for your business. So sometimes people think, well, crowdfunding basically is I'm just going to put this campaign together and I'm going to put it out to the masses and people are just going to invest in me. And what we have found is that isn't the case. Strangers don't typically just invest in you, but who does invest in you are people that already support you. So your existing network are the people that are wanting to invest in you. And the result has been tremendous. So on average, our alumni businesses, beyond receiving that immediate capital infusion that they need for whatever the project is, beyond that, the longevity is they're seeing a 33% increase in revenue post-campaign. And that is because all of those people that invested in them created a flywheel, and they're sharing it with their friends and neighbors and social media. So it's really neat what ends up happening post-campaign. So far, I don't see this chipmunk. Okay, let's see. So why crowdfund? What do businesses, what is the reason to do this? And we talked a little bit about this, but why right now? And if you look at number one, fair capital, the financial markets right now are extremely turbulent. So those accredited investors that I was telling you about, their pockets are deep, but their pockets are closed right now. In addition to that, you're seeing banks lend at a very, very conservative rate, and they need to do that. It's obvious. The risks are way too high to lend to businesses that don't know if they're going to be in business in 6 months. So the traditional players, their pockets are very lean. However, as I mentioned, households are flushed with cash. And they're flushed with cash because they're doing what you and I are doing, which is working from home, not leaving the house that much, doing a lot of things that are free and outside, and they're not spending all of their money on retail and going out to dinner. So they have extra money to spend, and that extra money can go towards investing in businesses that they love. And it can be any business that they love. And then two, the community support. When asking why supporting local businesses is so important, there were two clear leading reasons. Supporting their local community was 80% and local economy was 54%. So people are out there, 84% are ready to invest local, and they want to. They just need to know how. And we're an avenue for them to do so. So, if you're buying a gift card, if you are, supporting by purchasing something online, there are other avenues beyond that, and this is one of them. These are a few other reasons as to why crowdfund. Small businesses, they don't have a lot of money to spend on marketing. And so crowdfunding does that for them. Brand awareness is huge because we post this all over social media, and that helps with marketing. It's basically a marketing campaign. And then the customer engagement. And I just put a little note about, we don't work just with restaurants, but we work a lot with the food and beverage industry. And what happens in the food and beverage industry, it strengthens the ties of business of their consumers, because they have consumers that can't come in right now, so it's a way for them to participate. So how does this sucker work? All right. Business owner, first thing a business owner would need to say is, I need money and I need it for this reason. So whether it's operating expenses to get through and weather the storm for COVID, whether it's to refinance high interest debt because they had to take it on during this time, whether it's to hire an employee, to do advertising, to buy equipment, you name it, there's things that small businesses need. So that's the first thing. What do you need money for? And then once you figure that out, then we apply. So you apply and qualify to run a crowdfunding campaign very similarly than you would to apply for a loan at a bank. However, the financial application is done and the underwriting is done in a timeline of usually 1 to 2 days. So it's very seamless and painless to get through the application process, and you're talking to your underwriter. So there's no bureaucracy of having to go up the chain to get things done. So you apply and you get qualified. And qualified means that you figure out, what's the term going to be? What's the rate going to be? What's the maximum amount that you need? And I'll go over those nuts and bolts in a little bit. And then the second thing, once you agree that these terms look good and you have peace of mind and comfort around this debt and this amount of debt, then you put together the plan. And the plan is the secret sauce. So it's Honeycomb secret sauce as to how you crowdfund and how you raise this capital. So we have we have that outreach and strategy plan that is successful and is 95% successful. So the businesses that we work with that raise this capital through crowdfunding, they'll see success as long as they follow this strategy and outreach plan that we customize and put together for them. Third is to execute. So once the plan is ready and we put up this campaign, then the campaign runs for 30 to 45 days. And that's the time that they're raising the capital and the people are investing in them. Once the campaign is over, we put the money into their business bank account, and then Honeycomb manages the compliance. So we manage the payments from the business owner, and then we manage the dividends and the ROIs to the investors. This is an example of what a campaign would look like. If you take a look at Honeycomb Credit's website, you'll see a number of these, and this is the front page of a Honeycomb campaign. So here's an example of the Pittsburgh Juice Company. There would be a video, there would be a campaign copy story, and then here's an example of what the investors would be looking at. So to invest, they would just click on invest and be able to invest. And whatever they invest, they're going to get this rate of return for the life of their loan. So in this case, Naomi was looking to raise $40,000 to purchase a juice truck. She actually raised $38,000, which was right over her min, and was able to get that capital. So here are some of the things that happen that you do during the campaign and that we do. So business owner is engaged in the campaign and is going to follow that outreach plan. What we do is we put together social media marketing for all of our channels, for our newsletters. We do weekly check-ins with our client success team, which is called our crowdfunding coach. We also include press and media opportunities and ongoing marketing and outreach advice. And what ends up happening is, beyond getting the capital, 75% of our campaigns receive press coverage, and an average of 7 mentions throughout each campaign receives press pieces of at least 7. And then they have access to our network of over 17,000 investors and supporters. So to give you some examples of some alumni that we've recently worked with, Melissa, she owns Unbar Cafe in Shaker Heights. She had opened her cafe in February of 2020, and in March, COVID hit. And Melissa had spent her entire retirement opening this beautiful cafe in Shaker Heights, and she was doing that for succession planning for her children. So when she came to me, she was pretty much, closed and afraid. So she was able to raise $30,000 of what revenue she would have had to get through and weather the storm, and now she's doing just fine. Another example is our friends Valerie and Hannah at Sits and Wiggles Pet Care and Training. They had been working as a pet training for over 6 years, and they wanted to grow their business and buy a facility, and they were able to buy their facility and lease out their facility and do the build out of the facility by working with us, and they raised $19,000 to do that. Here's Global Wordsmiths, Mary Jane. Mary Jane came to us during COVID as well. And what she does is a lot of different types of training and coaching around translation. But when COVID hit, the PPP and EIDL loan was just not enough for her to sustain. So for working capital and operating expenses, she was able to raise $40,000 for her social enterprise. This is one of my favorites, Candace and Curtis. I had talked to them like a year ago, and they were doing really well with their catering company, and it was all vegan, and it was vegan comfort food. And when COVID hit for them, all of their catering events were canceled, just done. So when we talked, it was all about how to pivot and transition their business so the revenue streams could, they could get new revenue streams. So so what they ended up doing was purchasing a new trailer, and you'll see their trailer at all different types of pop-ups in different places. But that's what they did. They raised $30,000 for that. Just to give you some quick nuts and bolts, this is a loan. You're paying this back to your community. So what the average terms are for businesses that work with us, the interest rates are anywhere from 5 to 11%, and the investors get that full ROI. The term is 3 to 5 years. The minimum that a business can raise is $15,000, and the max is $500,000. The campaign lengths are usually 45, anywhere from 30 to 60 days. And then this last piece has been really important lately. When and if the economy, state level, city level, national level, if it ever shuts down, the economy shuts down, then all of the businesses that we work with, their payments automatically stop. So that's actually what happened when COVID hit our alumni businesses. They were able to stop payment until the shutdown had been resumed. So you never thought that force majeure clause was going to be a value add, but it really is now because of COVID. Here's our team. So we've got, George and myself, Becca, who leads our customer success. And then here's the rest of our lovely team. And that is the end of my presentation.